So we are really delighted to have distinguished speakers on our panel, and it I think provides a good mixture and good balance of representing different countries. We've got also public sector, and we've got the market participants and infrastructure. So let's kick off right away. We will structure the panel in 3 parts. We first take a look at the current state of affairs. So just set the baseline. So where the Baltic capital markets stand today, what's good in it, and what can be improved in the future. Then we will move to the recent changes of infrastructure and T2S, and to see whether those elements can bring kind of tangible benefits for the capital market development here in the region. And then we will focus on what we can do in the future and what we actually must do to facilitate the markets here. I suggest we start with more general remarks around the current situation by each of the speakers, allowing approximately a few minutes for that. And why not to start with the hosts? So, Maris, what is the Central Bank of Latvia, or Latvia's Banka, take on capital markets?
Well, good morning, everyone. Having said that, we have experienced single gateway, we have a single trading platform, harmonized regulations and market practices established in the Baltics. We should also have to admit that in the current environment of very low interest rates and excess liquidity, especially in the banking sector, there are plenty of opportunities for issuers of debt securities for borrowing on very favorable terms. From the central bank's perspective, we should acknowledge also that there are a number of issuers who have issued debt securities, namely treasuries and utility companies whose securities are eligible for Eurosystem monetary operations like credit operations, and also for asset purchase programs. Having said that, of course, there are also drawbacks. As was mentioned earlier, we have both stock and debt markets relatively tiny as compared to global markets. Liquidity is not of such a scale like in other markets. Well, what can we do? Of course, there is need for more instruments in place in order to basically smooth transition of funding into real economy, into capital markets. So we will probably touch upon later on, but I will start just saying that, well, the development of corporate covered bonds, securitization, more effective use of financial derivatives should be developed. Nowadays, well, especially taking into account our market, there are no asset-backed securities or covered bonds issued so far. Well, and last but not the least, well, analyzing our markets, especially from cost-effectiveness perspective, we should admit that current custody fees for custodian services are less attractive in our region than in other European markets. So there's still room for improvement.
Thank you, Maris, for these insights. And let's have a view from another public sector representative, from Mr. Sigitas Mitkus, who represents the Ministry of Finance. And of course, the ministry is active in capital markets through various like policy making, and of course also government debt and others.
Thank you, and good morning to everyone. Of course, I am not be talking about figures. Probably you know very well where are we in our region, but just I would like to make reference what Arminta was saying in her speech about the journey, and let's talk about a little bit about the future. And Ernest Hemingway said that never go on trip with anyone you don't love. And also African proverb says that if you want to go fast, you should go alone. If you want to go far, you have to go together. And European integration process is about the future. And today's discussion shows that we are in very good track. Talking about priorities for the Baltic states and for Lithuania especially, now we are working on covered bonds, on securitization, on institutional investors. We do understand that we have to pay more attention to the retail investors, also institutional investors. And especially I want to emphasize the importance of financial literacy here, especially in our region. And if we want to go far, we have to invest to financial literacy. Also, talking about CMU as a project as such, of course CMU is about how to create better environment for investors, new financial instruments, how to create choices for funding, and of course CMU is about stability and resilience. We have to pay more attention to development of capital markets in general. Thank you.
Thank you. Thank you. It was really very valuable points, and I hope we can get back to also Capital Markets Union topic, what kind of more specifically we could have there. Let's have a view from the market participants. And Anders,
yeah.
You are part of one of the largest banks locally, so I believe you take the credit and responsibility also from where we are today in terms of the markets.
Absolutely, thank you. And first of all, I think it's a great achievement because I see now and then quite much competition between these three Baltic countries. It's a great achievement that you've done this together now. So that's a very good foundation for the future growth in these markets. So coming back to having a good foundation, what can we then do in order to improve the markets? And I think one of the key drawbacks looking from this from an international angle is of course that markets are small and thereby liquidity is limited. So what can we then do in order to improve liquidity? And a couple of things have been touched upon already here. But first of all, I think it's the quality of the issuers coming to the market. That's one thing that we can discuss about later on. I mean, how do we do that? Because we need to create a good infrastructure. What I mean with that, having good issuers, good investors on the other side, and how to get this to work together like a machine. So it comes to the quality of the issuers and the size of the issuers as well in order to create enough free float in the various instruments to get liquidity. Secondly, it comes to another topic as well when you're looking for this from international angle. That's about transparency. A lot of things has been done, but it is a drawback when I'm in Sweden and in other countries outside the Baltics, and I need to explain what's happening a little bit with this kind of money laundering scandals that still are going on here. I mean, it doesn't matter what bank it happens in, but it's bad that it happens because it gets a bad tarnish for the brand name of the Baltics. But then we come to the investment side, and here quite much is happening in terms of that we're building up asset management in the Baltics. You're getting more type of investment, you get pension investments, and that's been a key developer for, if I look just on the Swedish market that I used to work in a lot in this area before. But then it comes back to what you touched upon, financial literacy among the private individuals. I think that is a key thing, and we are ourselves quite much out in schools developing, not me because I don't talk the local languages, but educating children as well on these things. Because having the private investors having an interest for bonds and equities, that is really important, meaning that if I have some money I want to save, it's not necessarily that I go into real estate, but instead I go into the markets and save money. So I think there are things that we can do, and I think this is how do we work with this jointly, because it's not one or the other, but how do we create this ecosystem together?
Thank you, Anders. Yes, I think we already can hear some joint themes such as financial literacy and transparency. So let's turn to another market practitioner, Ivars. You are and your bank are one of the most active banks in terms of reaching out to international investor community, and perhaps you can advise how they look at us, and is there actually anything for them in the Baltic market?
Certainly. Good morning, everyone. People on that side of the room might be thinking that I'm keeping my head below the parapet, but believe me, I'm not. So I think the best thing I can do is really to lay the scene in black and white that actually faces us today. Now, so much work has been done, and a lot of people in this room should be taking a bow. I mean, we can now say welcome to a region which is part of the European Union, part of the Eurozone, part of NATO, even part of the OECD in that context. So it would be then kind of strange to say at the same time, welcome to a frontier market. Now, that's pretty interesting in my view. So we haven't even reached this so-called emerging, needless to say, not even speaking about developed market status. Now, why is that? Is it because we don't want it? Well, I don't think so. Now, is it because of low GDP per capita? Absolutely not. Is it due to low economic complexity? Absolutely not. There is a third factor, which is actually too small or difficult to really fit into any other classification. So here we are. So in that context, we've spoken about having small markets here, but let's also give a very good illustration exactly where we are today. In Europe, we have large caps, mid caps, small caps. A mid-cap company typically in Europe will have a market capitalization of 2 to 5 billion euros. Now, the good news here is if we put the three Baltic markets together, we actually slightly exceed that and we make just over 6 billion. So I think that helps us understand exactly where we are. Now, I like to therefore address most Baltic companies as nano-caps rather than even micro-caps. So market cap on its own isn't such a bad thing. I'll talk about that maybe later in terms of what we can do. But the key thing we should focus on today, in my view, is that market cap to GDP is something where we can greatly improve upon, considering that we are right at the far end of the tail from a European context. Thank you.
Thank you, Ivars. Yes, I think there are those challenges that you outlined, and hopefully we can jointly find a way how to address them. Arminta, you've been part of capital markets for quite many years, so what would you say?
Yeah, I think I can build upon many of the insights that have been reiterated by the other panelists. I think whatever form or shape the market takes, whatever technology powers it, the matching supply and demand is at its heart. And if I look at the Baltic securities market, what we see exactly the absence of that match, both at the upper end and the lower end of the market, if we talk about the size. So if we look at the upper end of the market in terms of large caps, what we have there, we have pooled investment in the form of pension funds or mutual funds, which are very eager to channel their funds into large cap, well-governed companies with stable cash flows. And the majority of the Baltic large private companies, they have emerged during Wild West, and are private mostly by conviction. And actually, as long as they can keep getting, funding in the form of loans, probably, maybe shouldn't sound too pessimistic, but hard to believe that anything would trigger them to turn to the public capital markets. Maybe succession. And this is why SOEs, the state-owned enterprises, become so important at that upper end of the market. And sometimes when opponents say, well, will it be the magic wand? No, there is no one. There is no silver lining. But if we talk about bringing the supply and the demand together in the larger cap segment, SOEs can actually do the trick and get the wheel spinning. Now, if we turn to the lower end of the market, in terms of size, we have exactly the opposite. So we see a pipeline of companies with good ideas, good business ideas, who are actually quite open-minded. They are usually owned by the new generation of entrepreneurs who are not scared of transparency and disclosures and sharing and caring. So they are looking towards the public capital markets for funding and accelerating their innovation and their growth. But here we have exactly the opposite issue, the shortage of the capital supply. So again, if we look for solutions, retail investors, sure, we look at Sweden. We see how powerful equity culture can be. And actually, the thriving First North market in Sweden is exactly the testimony of that. Maybe public-private co-investment vehicles that we just have one, the first pioneering one established in Lithuania. Let's see, hopefully that will help us also address the supply and demand. So that would be my take to start with.
Thank you, Arminta. And I'm making notes. I think we have the theme of companies, that it starts with companies as one of the themes. And there won't be one wonder wound, so to say. So it's about the ecosystem as a whole. Mark Bale, what would be your take on the matter?
Well, it's more difficult for me to judge from inside, so I look from outside. And what I think we can see as an asset for developing a market is you are perceived as a region very much prone to new technology and new developments. So the capacity you could have to capitalize on bringing new services and making the new technology more approachable for the market would certainly be seen as an asset from the outside and can attract those capitals you are looking for. The point made were certainly very relevant. That's not contradicting it, I think, but just to show that the capacity to grow for a market which is building the appropriate infrastructure, I think, can be very big. As soon as the highway is in place, then the traffic can go through, or the high-speed train tracks, the train can go through. And what you are doing these days by putting this regional infrastructure on a modern technology and completely integrated in Europe is bringing the path to bring in this development in. And the capital point you were making, capitalization of the market, could multiply very quickly at level much higher because of those capacities that we bring in, I think. So the card of the European identity and bringing the capacity of new development and capacity to be bringing those new technology into life could be an asset specific to this region, which could bring growth, I think, and be appealing to the rest of Europe.
Thank you, Mark. Let us do that. We return to some of the more general phenomena that drive the success of capital markets, such as companies and retail and literacy, just a few minutes later. And now let's look at whether what we've accomplished now with the Nasdaq CSD merger and joining TCHS, whether we think that could be an important element, and where does that kind of stand in terms of the priorities. So, Arminta, what would be your response to this?
Yeah, well, if we look at the market infrastructure, then accessibility, efficiency, and resiliency are really the key undertakings here. And if we add this size dimension, whether we want or not, we cannot escape that. Then accessibility, comes with the underline. And I think we can just naturally, probably investors would, make an effort to reach China or Brazil, or Germany, but we cannot expect them to go out of their way and, sweat in order to trade, settle, and manage their Baltic securities portfolios. So I think this is very fundamental. And if in business we often say that, be unique, have your own differentiator, then probably talking about the market infrastructure, and especially for smaller markets, standard actually is maybe the best attribute, and the best the best description. So I think with that in mind, Nasdaq, together with the whole market, with all the Baltic community, has gone really far away in terms of integration. And we were actually among the very first in Europe to move exchanges, the marketplaces, on a shared platform together with the Nordics and Baltics for accessibility, for new technology, but also for accessibility. And then we had convergence on the regulatory side, rules, products, indexes. It's been really a long journey. So I think that what we have just accomplished last week is was a very natural next step. We needed certain things to happen on the European dimension in terms of T2S and CSDR, a lot of what Mark Bale was talking about, just to have the right environment. But then we were the first ones kind of to leverage that. So I think that the accessibility is something we can never get out of sight. And clearly, the consolidation of the CSDs and bringing them on the T2S, and hopefully that's not the end, so building more linkages to other markets will help us improve also the traffic. We need the traffic.
Thanks, great comments. Ivars wanted to jump in.
Absolutely, highly relevant. And if we're talking about building a house or building, one of the things which is often overlooked and only taken for granted is actually the back end of a trade. I think the best way of describing it maybe is that, and with all due respect, please don't misunderstand me, is that people expect the back end of a trade to be a bit like plumbing. It should work, everything should be okay, but guess what? If the pipes aren't wide enough, if the capacity isn't good, we run into not only environmental problems. Considering that, where I see this on a daily basis and have seen over the many years having been involved in the Baltic market is we are not only dealing with investors from Europe. My everyday is focused mainly around institutional investors from Europe and the US. And if there was ever going to usually be a problem, it isn't so much the execution. Everyone can press a couple of buttons, get a trade done. We do fortunately have a combined Baltic market already, but guess what? We then have to settle. Now, the Baltics have moved way up market. We already have the Eurozone, so it's not anymore having to struggle to get Latvian lats or Estonian krona or Lithuanian litas, but now also having moved to T2S, the whole function is just so much easier for everyone to understand. Doesn't matter which country or region in the world you actually come from. So a great move in my view.
Thank you, Ivars, for this. So, Arminta, just as you touched upon the stock exchanges, one may be curious if we are going to merge the stock exchanges too in Nasdaq.
Well, I think in general there is never an end state. So I think we have to be open-minded, and I believe the very fact that we are the first ones to, together with the regulators and central banks and governments, really making this bold move and merging the FMIs, the national treasures, I think absolutely is proving that we are all very open-minded. So having said this, I think change cannot be without purpose. So you need to have a purpose if you do something. And if we look from the investor side and the members, the exchange member side, I think we are operating as one exchange, as one market. Now on the issuer side, it's different. But what we are asking the issuers and ourselves all the time is one exchange in a chosen jurisdiction, in a chosen single jurisdiction, is what the Latvian, Estonian, and Lithuanian issuers want. And so far, we haven't got this, kind of proof that they are ready to cross the jurisdictions, and look at this in this way. Probably it will evolve. So I would leave like, many dots, not one, there at the end of the sentence.
Thanks, very interesting, Arminta. So let's explore further what T2S can bring us, and yes, Mark.
Just to react to you, Armina, is it the same as well for the debt instrument, in particular for the government debt instrument? I think could be interesting to hear.
About the
split, the necessity to be in the home country as issuer, or is it possible to have more openness there?
Yeah, well, I think that, on the debt side, of course, again, we have the corporate side and we have the national government debt side. For the markets of our size, I think the offering of the instruments is really important. We don't have yet, let's say, the derivatives there, yeah? So it is still about very basic cash instruments. And if we look at the Baltic countries, then having the offering of the treasury instruments also accessible to smaller institutions and retail is very important, for the wholeness and the depth of the market. I guess, and I thought that the market.
If I can make a comment on the debt market, because Evers is selling quite much to the international investors then, but if you look on the bond market, I feel that there's a very good international demand also for Baltic bond. That is not an issue at all. I mean, it was just a couple of months ago we did a 300 million euro bond issue plus in a green bond for a Lithuanian energy company, and it was a very good demand on that type of paper. But then of course you have an issuer coming back to that is not going for the last cent in terms of making money on that one or getting the cheapest funding, but it's also kind of a statement that you do a green bond because you want to be a green company, you want to do green investments, and so it's a certain type of market you tap then. But it is a very good demand, and I don't feel, but coming back to what you talked about earlier, I think this is about making it efficient, because more or less all of us, and especially our kids, expect to be able to do everything on the mobile phone these days, right? You don't want to have kind of any manual processes back end and so on. But we still have in the banks, we can be sure about that, but we are trying to take those away. So we need to increase that type of efficiency. And I think therefore this is a very good step in doing that one. Yes.
Thanks, Anders. Sigitis, perhaps you can comment how you look at T2S and opportunities. Does it mean more domestic issuing, or what's your take?
Yeah, so coming back to integration processes in our region, I think that the more integration, the better. And if we want to be competitive, if we want to reach scale, we need to have more joint projects in the Baltic region. Colleagues were mentioning single entry point, single gateway, single interface. Yes, we need to have more single what in our daily vocabulary. And referring to what you were asking about T2S. So yes, single interface, competitiveness, very important is time factor for investors, for businesses. So I think that this infrastructure will create a lot of opportunities for businesses and investors, also for the governments.
Thank you. Any add-on comments? Yes, please, Maris.
Just commenting on infrastructure, I would say the great job has been done. So no doubt about that. Well, the transition from decentralized, fragmented to harmonized post-trade activities has been achieved. But I would say the devil is in details. So, and in order to use all fruits originated by this common infrastructure in place, well, I wish and I really would say that the Nasdaq CSD should go into detail and to offer its clients base very competitive terms and conditions in order, being part of whole system, in order to achieve that issuers still want to issue domestically securities. Investors still want to keep both domestic and cross-border securities here in Nasdaq CSD. So that is the biggest challenge, I would guess. Finally, on infrastructure, I would also mention that in order to reap all benefits of T2S, well, I see that Nasdaq CSD takes opportunity and establishes all legal ties with other depositories in order to be more efficient. And by saying so, I guess that will be benefit for all participants in this market.
Thank you. Very, very valid points. And Arminta, maybe you want to react and provide some comments on this right away. Maris mentioned the terms and conditions, and I think also in the opening remarks you talked about the pricing. So I don't want to put you in a hot seat, but I will.
Yeah, you know, in there's the number of digits in terms of investments made in making all this happen. So I think that you know, it's no secret why the CSD industry in general and the post-trade industry is now a hot place because it is a bit of the squeeze. You know that we have to make the investments both in the technology upgrade, in the integration, in much higher actually regulatory standards, you know, really a big upgrade. And at the same time, the market is being liberalized, it's becoming more competitive, and of course, in order to see more active cross-border flows, then the economics have to be more favorable. So I think that we are in principle committed to the journey, but it's not going to happen like over time. But I think it's absolutely inevitable that you know, harmonization and single is the direction we are going to undertake. As for linkages, absolutely. I mean, that is the layer that needs to be added, you know, and we started to work on the priority ones already to have linkages established. I think some of them are quite self-evident, which would need to be prioritized. Others, the market will shape the demand. So,
thank you, Arminta. And Anders, now I'd like to turn to you as a market participant, and as it came up, it is relatively big investment into initiatives like Nasdaq CSD and very much driven also by regulation. So how you look at this in your organization, including the very fact of T-test, whether you really see it only as opportunities or also as a threat, as we know that there could be challenges for regional custodians, for example.
Well, you are right in terms of, we have the same problem in terms of doing investments here, yes. Because it's quite many, if you peek under the hood of a bank and the IT department, it's very many investments going on. Everything from in terms of core banking systems, in terms of all digitalization projects going on. And of course, then you have very many mandatory projects coming in that is taking resources in that one. Will this be a competition? No, of course, I mean, if you go back to what the purpose of a bank is, I mean, you can take two takes on that one. Either we are there just to make money for the shareholders. That's one take. Some banks are taking that one. or we are there to be a part of how, that is our take then, what can we do in order to drive growth in society? Because as a bank, we are extremely dependent on a good development in any country we're active in. And therefore, in order to have a good, decent, sustainable growth in the country, in terms of GDP, in terms of the welfare for the general public, that is kind of very important for us. And therefore, if we can participate in development that takes down transaction costs, that thereby improve the capital markets, I mean, that is a core thing for us. We talked about that a little bit earlier, about the bond market, and then someone mentioned that the trickiness then, of course, because we've seen that banks have been very liquid, not least with the extremely low interest rates and the negative interest we've had. Meaning, of course, that it's been quite easy for companies to go to bank and borrow money at cheap rates in a very competitive market then. Of course, this is something that has also hampered the development of the bond market. Does this mean that we would prefer to just use our balance sheet and finance companies versus instead driving the bond market? Not at all, because we think that having an efficient bond market, that's another source of financing for companies in terms of senior debt. And when it comes to equity then, I mean, banks, apart from a very small portion, we are not providing equities. You need to have an efficient equity and risk capital market. I mean, that's one of the drivers of the growth in society. And going back to Sweden, I mean, that's been a key success factor for that country. And if you look then on what our owners are doing, the Wallenberg family, they put quite much of their shares into foundations. And the foundations, what are they using the money for? It's not to go to a sunny place in Southern Europe and enjoy good days. It's to reinvest in development, reinvest in research, in education and so on, giving money back to society in that sense. I think creating that type of ecosystem. So I think if that was what you answered, but developing the markets, we are all into that. It's not a threat. It's an opportunity, but it's kind of a bigger opportunity, not only for us, but also for society.
Great. Thank you, Anders, for those comments. And of course, it's great to hear that you also as a bank are committed to bond market development, and you certainly kind of stand out. Also, historically, the Lithuanian energy case already came up, but several years ago it was Latvian energy company that issued the first bonds and the first green bonds. To conclude this second section of the panel about infrastructure, Bale, perhaps you can make some final remarks, including that, well, despite what we've done is I believe great achievement, and what we see also, there is a great appetite in the European institutions to showcase our example, because that is what I believe Europe needs, consolidation. But then again, looking at small markets, despite joint now 3 markets into one, will that be sufficient? And what else such small markets could do in terms of, be more competitive in future?
Thank you for the question, Indus. Maybe, I mean, I cannot really answer. I mean, I'm not an advisor to the market in a way, but what I can tell you is that I think, I mean, taking the image of the plumbers of the financial market, that we have built the plumbing, so the pipeline, the framework, to develop further functionality in an integrated manner for Europe. And you have a special situation, as I said, because you consolidated your 3 countries. So this could be seen with a positive sense, I saying that, as a lab, a test lab for new capacity to develop new product. One idea that I want to push, which I think is coming as a next stage, because you will see that the difficulty to develop links between the market is costly and not so easy, and there is some competition issue, but there is also complexities attached to it. Means that we have to go to the next step of integration. The next step of integration is to deliver a domestic euro area financial market. A domestic euro area financial market. So no more borders within the area, as you were mentioning. And what you have done in this country, again, is an interesting, together with the other Baltic states, an interesting step forward. So shouldn't you try to think on this and what type of next step you could take? And one example which is dear to me that I can mention is to create a new type of debt instruments who would be domestic, at least for the Baltics, if not for Europe. You know that we do not have today a domestic debt instrument, not a domestic securities for euro area. We have French, German, from each country, Estonia, Latvia, instruments, but we do not have one which have the name of European issuance, or what we call Euro bonds, in fact, are international markets, which is another segment of the market. Huh? So here there is something maybe we could test. That's why I was asking the question on debt instruments earlier. I mean, you don't need eventually, at least for corporates, for governments, maybe it's more complex because it may be attached to certain piece of legislation which are outside of financial law, for equities as well. But for debt instrument, corporate debt instrument, would be very easy to have a regional debt instrument that could be used by any issuer inside or outside of this area, but which could tap the whole market as a domestic market. So maybe that's an idea of how to capitalize to the next level so that you could develop new products which could be rolled out after elsewhere in Europe.
Thank you, Mark. So I suggest we now take a look at more specific actions that we could take individually and jointly as the stakeholders to improve the capital markets, and let's touch upon the items that we covered in the first part of panel, such as the retail and institutional and companies, of course. So one thing that came up was the striking success story of Swedish capital markets that we are living now, and the number of IPOs is just incredible by any standards. And Anders, you are from Sweden, so I think you're the best one to comment.
Yeah, and actually between 93 and 2003 I was working in corporate finance for Enskilda, so I was doing a lot of that business. But that is history now. I think last year, if you're not only looking on Sweden was the lion's share, but in the Nordics we had more than 60 IPOs, and then we are probably taking away some of the kind of really smallest IPOs, but 60 IPOs raising close to 9 billion euro in new equity for those companies. However, if you then add in kind of the secondary market and big trades and so on, of course the market is way, way bigger than in terms of placing. So it's been a very, very active market. However, if you go back in history, you can see that it's very much depending on kind of general economic state, and of course, what are the alternative investment opportunities. So this is a market that used to go a little bit up and down, but for the last years, it's been a very, very active market. And this is probably, if you go back to the corporate finance boutiques, it was when I was there in the 90s. For a while, we had some people, all people more or less working on M&A, and then a couple of years later, everyone was working on IPOs. So it's a kind of a cycle of the market. I think that Ivars recognized that one, yeah. So what has then been the success stories, or why has the market developed in this way? And I think one thing, we talked about this, about investors, because all the time when I was doing a larger IPO of any size, I mean, we were always in London, and we were always in Boston, New York, and so on, and meeting investors there. So the international investors are not the majority of the investors in the Swedish market, but I mean, they have been very active, and the Swedish market has been very open to that one. Of course, one of the attractions then come back to that we have quite well-known blue chip companies then that are leaders in their part of different industries in the world, and that of course has helped a lot, because then you have some big names. So if you want to be an index player in Europe, you need to have a part in the Nordic area as well. So that has been happening. So that's one thing, of course, when we start to get up the size of the Baltic countries and you start to get into these indices, you need to invest. That's kind of a driver of that market. But then coming back to Sweden, I mean, once upon a time, before I was born, my father, he was an ordinary blue-collar worker. He was doing deliveries then in the Stockholm area, and he took his delivery truck now and then he actually parked it outside the stock exchange. So he sneaked in to see what happened on the trading floor, and that was it is quite common that people were interested in what's happening on the stock exchange. This was nothing bad. It was a transparent market, and to some extent these these kind of families like the Wallenberg and other kind of families, they were seen a little bit as heroes doing something good for the country. This was even in the 60s, 70s when it was kind of more leftist thing. So I think that has been creating a way that what should I invest in? Of course, you can do speculation in real estate, but going into the stock market has been a quite common way for Swedes to save money. And comparing to the German market, which I understand is much more of a bond market, that the German privates have been investing historically in bonds and Sweden has been investing in equities. And of course, long term, equities should outbeat bonds. But this is creating a system. So for many companies, of course, why do you go to the stock market? We have quite much of the industry in Sweden, or not the industry, but general service companies as well, are owned actually by private equity companies. So we had a very active private equity company. Of course, a private equity company, they want to have an exit after a while. So this is also driving. When valuations get to a decent level, then you can go to the stock market and do an exit, unless you do a trade sale to someone else. So but it takes time. I think that is something. It takes time, and you need to develop this over time, but you need to create a strategy for that, to set that up. And I think what you said about starting with the SOEs in terms of having good issuers, that's what we see as well. It's starting in the bonds, but it will come in the corporate field as well, and it will also be the driver for the IPO market, I would say.
Very interesting, and also the story. Well, I know I shouldn't be taking too much airtime, but I also couldn't resist than tell a story. I was walking early morning to Nasdaq office in Stockholm, and there was a confused lady, walking around, and she was old lady. I mean, 70. I mean, not to be politically incorrect, but. And she approached me and asked whether I knew where the Nasdaq exchange is. And I said, yeah, I'm walking there. So we had a walk together. And she was telling, there is like breakfast investor forum in stock exchange premises. She is going there. She has some stock. She was so much into it. She was so excited that, and I thought, oh gosh, will we kind of live to that date when we will have the same story to tell about Baltic markets. Ivars, you work with all different kind of investors, institutionals, the retails, and also with companies. So what would be your advice? How can we encourage retail? Can we actually encourage, or it is for companies the first?
I think everyone needs to be encouraged. I mean, let's face it, the 400-pound gorilla in the room is that this region is dominated by SMEs. So everyone should be focusing on them rather than, let's say, clearly getting over the hurdle of changing from frontier to emerging market status. So if we have SMEs, the good news is 4 out of 5 of the last 2 years listings have actually been SMEs where some sort of capital has been raised. So a little bit of progress is gradually being made, which is great. What do we need to do? Well, Anders very correctly described one key thing as being education, not only for investors on the retail end, but I think we should also be encouraging very strongly our local institutional investors, because right now, if you, for example, look at the allocation to Latvian equities by pension funds, it is significantly less than 1% last time I checked, yet a large amount is being kept in bank deposits. Now, obviously, that's not to say that all allocation has to go to local companies, but there should be, I think, more emphasis on long-term investing, both on a retail and institutional perspective, and that liquidity isn't necessarily anything. It's investing in good quality companies for the long term. And maybe one other thing which is worth adding is that also on the, let's say, supranational level, I think there is certainly some support which we should be garnering from the EU. And that is, one size does not fit all. Now, previously the Minister was mentioning cooperation on the Baltic level. Even there, I think it's still a little bit of a challenge where supranational entities from an EU perspective will say, okay, you want to develop the local market for SMEs or the local capital markets, here's a program. By the way, minimum investment into each company is 20 million. Well, guess what? That's the market cap of a typical SME we might be actually listing. So I don't think supranationals want to become 100% shareholder of an SME that we're listing, and we really then need to use much smaller amounts amounts. Now, that's obviously going to be tedious for these supranationals, but I just really believe they need to be explained. What is the actual fact that this is a small region, small companies, and we have to apply special treatment in terms of getting the capital markets moving, even from their perspective.
Thank you, Ivars. Arminte, Katrin?
Yeah, I can build on what Anders was saying about Sweden and now Ivars also. I think this is one very good thing about Europe is sharing and learning. And being part of the same Nasdaq group, we have kind of a privilege of deeper insights into the Swedish success story. So actually this year we are expecting 100 listings in Sweden. 70% of which will be on First North, which is the growth market for SMEs. So even a larger economy like Sweden, still 70% of the new listings will come on the First North, the smaller growth market. Why we have the pipeline, I think Anders was mentioning quite a few really key drivers, and I think it's a living testimony that it takes the whole ecosystem for this to happen. So the exchange alone cannot do that, you know, the market participants alone cannot do that. It's the whole ecosystem. It's when you have the advisors who are interested not just in the big tickets, but they are ready to do the legwork and find these companies that are good for the market and the market is good for them. It's about the government setting up the ISK, the investment savings account regime, with making not just it favorable from tax perspective, but I would argue even more importantly, so admin hassle-free, you know, that you don't need to care about your taxes. They are taken care of by banks sending the report to tax authorities. Then we have the whole community of analysts, of, you know, the intermediaries, the liquidity providers who are working to really back that market. And now, whether, you know, we want or not, I turn to the Baltics, and we sometimes, you know, when we are in the mood to joke at the exchange and like, you know, look at our agenda and what we do, we call ourselves the fourth investment banker in the Baltics. I will not name the other three because my neighbor may get offended. You are not on the list. So you know, and this is what it takes, you know, like companies in Stockholm, in Sweden, get through the door of the exchange, and we get out on the field to really help, you know, the community and find the companies.
Thanks. Sigitas, yes.
Thank you. And I just want to come back what Anders was saying about the strategy. Swedish strategy for capital markets, and in Lithuania we have started paying a special attention to development of capital markets since 2015, and a lot of good things have been done already. Different laws have been adopted. For example, law on crowdfunding, peer-to-peer lending, crowdfunding based on real estate, then also action plans for financial literacy, action plan for fintech industry development have been adopted. Now, currently, we are working on several fronts. We're looking at legal framework for investment funds. Then also by the end of this year, we will submit to the government the legal acts, draft legal acts regulating covered bonds and securitization. And here we would like to touch upon a little bit institutional investor side, because we probably in Latvia and Estonia colleagues have same situation, and our institutional investors, they are lacking financial instruments where to invest. And here, currently we have initiated a project with the European Commission on institutional investors, and for creating financial instruments for institutional investors. In addition to what we are doing now on securitization, covered bonds, and we are talking with our Latvian and Estonian colleagues about joint initiatives in the Baltic region. I'm talking about covered bonds. Probably we will have similar. We'll try to have similar legal frameworks for covered bonds, and yeah. So I think that ecosystem for capital markets is very important, and here all the elements: financial literacy, investors, businesses, consumers, all the elements are very important.
Thank you, Sigitas. So I suggest we draw the line here for the third section of the panel, and in the end I will ask each of you very shortly to say what you or your organization is going to do in order to develop and may do in order to develop the securities markets in Baltic, and also whether you expect something specific from others to be done. And yeah, even if it's repetitive in a way, you can just underscore the main points you want the audience to have as a takeaways. But before we go into this, let's see if there are any questions from the audience to any of the panel speakers. Yes, let's hold on a few seconds to get the microphone for you.
Kessler, Finantsinspektion. I have a question about institutions. We have recently seen that, certain banks in Nordic countries have moved their headquarters. And one of the arguments being that European institutions, SSM, for example, SRM, their benefits, they help to decrease costs. So here we are talking about the Capital Markets Union. And last week, the European Commission published a paper on ESA reform to strengthen the security supervision in the European Union. So what are your initial reflections on that, if any?
Is it a question to any specific panelist?
Up to you.
Anybody would like to?
What the Nordic banks think.
No, I forgot the question.
The ESA reform, the Capital Markets Union, which is creating more common standards. This is first set. Second set is common supervision, yeah? Mm-hmm. So last week, the European Commission published a paper, how to reform ESAs. ESAs are European supervisory agencies, among them ESMA, which is supervising all of you, except ECB, of course. So, and maybe the public institutions, other ones. But maybe it's more to the market then, yeah? What do you think? I mean, is the more federal, so to say, supervision necessary? I'm a member of the supervisory board of SSM. We see, lots of value creating out of this. I mean, the Latvian, Lithuanian, Estonian supervisors in the banking field have never worked as closely as within SSM. So what are your thoughts on does the Europe need more federal supervision or not, also in the field of securities markets?
Thank you.
Yeah, I can certainly share my insights on this. I think that in principle, of course, there are a lot of advantages and benefits in more convergence and more homogeneous approach. And again, the project that we are celebrating today would not have been possible without the dialogue among the regulators, the Baltic regulators, and the central banks. So I think because the market players become more and more cross-border. So if we talk about now our region, okay, we as the market operator are cross-border in Nordics and Baltics. We have a lot of integration internally. For us, it's beneficial to have clear, uniform standards and expectations, especially with regard to our governance, or how we structure the markets and so on. I will not answer for the market participants, but I would assume that for those, again, who are acting cross-border, I'm coming back to my other comment about uniqueness versus, standard and being harmonized. I think being more uniform and harmonized is beneficial. Having said that, I'm coming to Ivar's point about proportionality. So given we are smaller markets, we are frontier markets within the EU and Eurozone, I think this proportionality aspect is fundamental because we may kill certain things before they are born. If disproportionate measures and totally one size fits all, applies. And we'll see where, for example, MiFID II takes us, but there are concerns there, from the market operator and the market participants that we may be regulating or over-regulating the retail segment before we have it. So I think that it should be sensible convergence and harmonization.
Thank you. Mark Bell, any?
Yeah, no, I mean, when you asked the question, I was a bit embarrassed because I cannot comment officially on that because the ECB Governing Council will take an official position. But in general, the CMU, and in particular, this initiative is going in the good direction. And it's coming back to what I was saying before, is we need to create a domestic euro area, like the SSM has done for the banks. We need to do it for the rest. So we need to have a domestic area. That's the main point. And looking at one of the particular elements which was very much discussed recently, for instance, the clearinghouses, the CCPs, the Central Securities Counterparties, they are key infrastructures. And even though they are located in a specific country, like Eurex can be in Germany or I can take other name in other countries, they have a reach for all Europe. If one of them have a difficulty, create a difficulty to the entire European area, it's not specific to a country anymore. And therefore, the fact that we reinforce our European authorities to this dimension of domestic market is key for the future. And the point you are making is fair. It should not be disproportionate in the action, but the point is here not disproportionality, but an appropriate supervision for the good of all the citizens which are affected by the good functioning of those entities.
Thank you. And that takes us to the final part of the panel discussion. So I will ask each of you very shortly, in a few sentences, 30 seconds, to say what are your commitments, what you are going to do, and perhaps an ask for others. Let's start with Ivars from that side.
Broadcast, probably recorded also.
Sounds good. Sounds good. Absolutely happy to. So we have to continue to work hard on bringing many, many more SMEs to the market and admitting the difficulty that obviously it's quite clearly easier generally to do a 100 million euro IPO than a 10 million euro one. So certainly usually a lot more work for the smaller transactions, but that's what we need to do because we live in an SME region. So that would be the main driver from my side.
Thank you, Ivars.
And let me just add one thing.
Yes.
I shouldn't be speaking about my investment banking brethren like this, but also I think it's very important for people to understand if we're talking about capital market development, generally speaking, people want to do an M&A transaction because it's usually less bother than going ahead with a capital markets transaction, but that's just a secondary comment.
Thank you, Ivars. Well, Mark, any final remarks from you? You, of course, are not directly part of the Baltic market, but still.
no, we commit to support you with a good level of service and a good level of infrastructure. And as I was saying, evolving services. So being able to deliver services which will take on board new technological developments and support innovation and integration.
Thank you, Mark. Maris?
Yes, we definitely, from the Bank of Latvia's point of view, are going to support Mark and his team on combining Target 2 and Target 2 security systems in the future. So that's the way I think we will all benefit, again, from cost perspective. Those transactions will be more efficient and liquidity management will be much better as compared to today. Well, on financial literacy, the Bank of Latvia has done over the last years a lot of in order to promote, and will continue to do so. As regards legal legislation initiatives, we definitely will support working together with Minister of Finance and other involved stakeholders. More work to be done on, as I mentioned before, on securitization part, in order just to clarify those legal uncertainties as regards cross-border transactions, as regards, for instance, collateral agents. So those are things we as Bank of Latvia team see where we could just give hand.
Thank you, Maris. Yes, Sigitas?
Yes, our commitments are very simple to implement our strategy to become one of the best jurisdictions for financial services.
Good. Well, we are, of course, committed to continue to provide the Baltic markets with the best, I would say, of the market infrastructure. And I can tell you many CE markets really envy that we have Nasdaq in the region, and we can take advantage of that. We are committed to continue to be the fourth investment banker in the Baltics, but would rather let that space to be taken by someone else. And we've been for decades in the financial education. So of course we will continue doing that and working with everyone to grow the market in terms of companies and investors. But there is a list of asks, as we all agreed that it takes all of us to make it happen, and the market to get the market thrive. So the ask would be Baltic SOEs, the investment, the more favorable the regimes, whether taxation or admin for investors, retail, institutional, public-private instruments in the form of funds or just in terms of availability of new financial instruments to broaden the spectrum. I have more, but let me stop here.
That was a long sentence, yeah. We will continue with our stubborn efforts to try to convince our both SOE clients and also private clients, when I talk about corporates and larger corporates, to tap the bond market, which currently is a fantastic market to tap. And in addition to that, we will continue with our financial literacy project in terms of educating youngsters what it is about to invest your own money.
Thank you, Anders. On this note, let me summarize that we first looked at where we are today, and despite we've made a long way and improved the capital markets, there still is a lot to do, as in many ways we are still considered as frontier or emerging market. And we see that what we've done now in these days with T2S, that certainly can help us in that journey going forward. And finally, we heard, I think, quite interesting remarks and also commitments from the market participants, from the policy makers, to build a nice framework and a nice environment for the further development. Also, we will continuously work with investors and with the companies, and maybe even most importantly, which came up many times, is the literacy and just general awareness about the capital markets from all the stakeholders, from investors and from companies' perspective. So on that note, let's thank our distinguished panel for the insights they shared today with us. Thank you. There is also very, very tangible thanks, and I mean in the word of, in the meaning of this word, because it's real cash. Yeah, we are at central bank, and central bank has been kind enough to present the speakers with a unique Jubilee set of coins. It is the Latvian euro coins with Latvian symbols, but there is one special additional Jubilee 2 euros coin for the black stork, which is one of the endangered species also in the Red Book. And storks generally in Latvia, and I believe it's common in Baltic, but in Latvia is a special bird, and it's about 5% of world population. Storks actually have been born in Latvia, and sometimes we also call Latvia the country of storks or Svēteļu zeme. So this has been very kind of you from central bank, and let me present these gifts for the participation in the panel. Thank you. So. Sorry. Opa. Thank you, Mark. Thank you, thank you. And now we thank you, panelists. So we can have now the seats, and there is special guests for us today, and it is string quartet Strauss, and they will perform us a composition by Wolfgang Amadeus Mozart.